Well, hello and welcome to BloombergQuint. We are joined by the management of Prince Pipes and Fittings, Mr. Parag Chheda, who is the executive director of the company, to take us through their IPO, which is going to hit the markets on 18th of December. Sir, thank you so much, first of all, for taking the time out and speaking to us.
Sure.
Sir, I'll first like to ask you about, for the benefit of our viewers, could you tell us more about the IPO? Basically, what is the number of shares that you would be offloading, as well as the number of new shares that you would be issuing, and what is the sort of proceeds that you're looking to garner from the issue?
Sure. So the total company, the issue size is going to be at 500 crores, of which 250 crores is going to be for the primary and 250 crores is going to be for the secondary. Talking on the primary, the objects of the issue mainly is first, to have for our Telangana unit, we intend to spend about 180 crores. Second is, in order to have the maintenance capex for our existing plants, we need to look at about 80 crores. Thirdly, I would also say is that we want to repay our loan. Out of the total 300 net debt, we intend to spend about, repay to the tune of 50 crores.
Okay. So some of your peers in the industry include the likes of Astral Poly, Supreme Industries, as well as Phenolix Industries, and they have done quite well as far as the earnings are concerned. But there are concerns with respect to the overall slowdown in the real estate space. And as you know, a large chunk of your revenues do come in from the retail space. How are you looking at growth in a scenario like this? And do you expect to continue at the kind of run rate that you have been growing at in the past few years?
So I fully agree with you. Yes, there is a little slowdown in terms of the real estate. However, thanks to the government of India initiatives, what they have brought down. So talking about there is Jal Se Nal program, there is Amrut scheme, there is 100 smart cities. So there are various kind of initiatives that government of India has initiated. So we see a lot of growth coming in on the urban infrastructure. Also talking about irrigation, now just 1/3 of the agriculture land available in India is irrigated. And if I talk about not only in India but globally, it is entire for the irrigation, it's only the UPVC pipes which are used. So that is a kind of enormous scope that we see for the urban infrastructure as well as for the agriculture and irrigation.
Okay, so sir, in that case, have you received any of the large orders from the governments as well as institutions for the various projects that you just highlighted?
Yeah, so we have been dealing with various municipal corporations as well as the state governments, but this is all done through the EPC companies. Companies like Shapoorji Pallonji, Simplex and L&T. So we have to sell our products to these EPC companies who in turn would deal with the government or semi-government bodies.
So sir, in that case, could you also help us understand what does your order book stand at as of the first half of FY20?
So typically, historically, our order book position is to the tune of 25 to 40 crores. Okay. But in the current times, the order book position is almost to the tune of 75 to 80 crores.
Okay. So coming back to again your financials, and could you also help us understand what is your product mix like? What is the share of the different products that you cater to, be it your CPVC pipes or the HDP, as well as the different pipes that you sell, and what your broader product mix comprises of?
Yeah, sure. So, to give you a perspective, company is into 4 different types of polymers. One is the UPVC, second is the CPVC, chlorinated polyvinyl chloride. Third is the HDPE, the high density polyethylene, and fourth being PPR, polypropylene random. So more than almost 70% is coming from UPVC. So UPVC shall continue to enjoy the lion's share, obviously because the material being very versatile and cost effective. About 15% is going to be coming from the HDP, 20% is going to be from CPVC.
Okay. So one of the key benefits, at least according to what a lot of the street or what a lot of the market participants believe, is the huge potential in the building material space, given the fact that a large chunk of the market is held by the unorganized players. You do have a large scope in terms of expanding your distribution reach. You operate or you sell your products through almost 1,150 distributors across the country. Could you also help us understand which are the key markets that that you are looking at in terms of growth currently and your expansion plans going forward?
So first, to give you a good perspective, almost 60 to 65% of the market is the organized, and the balance 30-35% is the unorganized segment, and we are in the top 6 at the pan-India level. Out of my 1,400 distributors currently, out of which more than 80% are exclusive to Prince Pipes, and this is purely because of the kind of range that we have to offer is about 7,200 products that we are able to offer in the country.
Okay. Sir, also could you lastly just help us understand that given the strategic location of most of your manufacturing plants, going forward, do you foresee a rise in terms of revenues coming in from the exports? I believe large chunk of your revenues, they are coming in from the domestic market itself. But going forward, does your expansion plan also include selling your products in the international markets?
So to give you a picture is that within the plastic industry, plastic piping industry, all the countries are governed by the respective standards. For example, India is governed by the Bureau of Indian Standards. A small country like Sri Lanka is governed by the Sri Lankan standards. So there is a major difference in terms of the diameters. The good part is that India has having a good demand in the country. So more than 95% of our sales are coming from the domestic market, and we believe that this growth is going to continue, and so our focus is going to continue on the domestic market.
Okay, lastly, sir, could you also help us get some picture as to how your margins have trended? Because I believe the prices for a lot of your raw materials, like your polymer prices, they are dictated by how the crude oil prices have moved. And we have seen in recent times that crude oil prices have moved higher because of the expectation of the increasing demand. In that scenario, do you think that you will be able to continue to improve on your margins because of the fact that the crude oil or the raw material price comfort is not there going forward? Or do you think that you will be able to improve on these by way of improving the product mix?
I strongly believe with the kind of growth that we are looking at and the kind of roadmap we have, we would be looking at 13.5 to 14% margin in the coming times.
And in terms of top line, sir, do you expect a similar growth in terms of your top line as well? Any numbers specifically that you could share?
So the company, last financial year we've closed at 1,561 crores. We've been growing at last year we grew at about 19.5%. I believe that the numbers are sustainable, and that is what we would be looking around in the coming times.
Okay, sir, we leave it at that. Thank you once again for taking the time out and speaking to us, and hope to catch up with you ahead of the IPO as well.
Sure, thank you so much.